A very good evening, DC fam. My name is Moose. In today's episode, I'm going to explain to you guys one of the fundamentals about trading and about technical analysis. That's called market structure. Market structure is basically to know which way is the market going. When you're a little bit more experienced, you could see that by just looking at the chart. So in this chart in front of me, you can see the price is from this point, from left to right. You always look at the chart from left to right, no matter what, but you always will watch the chart and analyze the chart from left to right. So if you look from left, from this 16 October until today, the price is going up. You should see it as a stair. First, we have the start of the 16th of October here. This is the first low, let's call it a low. And then we have a small bump here. We don't have to call that a high or a low, but this you can call a high. And then the price came down, consolidated a little bit here. So it made a new higher low. That's a bullish sign. Let me explain to you guys what's the difference between bullish and bearish. We have a bull market. That's when the price is going up, and we have a bear market. That's when the price is going down. And let me be clear, in both markets you can trade. You just have to know which direction is the market going. If you know the market is going down, you can take bigger positions in your short positions and smaller positions in your long positions. You can stay longer in your short positions when we're in a bear market. You should stay less longer in your long positions because we are in a bear market. And the opposite is also the same. When we are in a bull market, you can stay longer in your long positions and shorter in your short positions. As you can see here, we have a very beautiful high, and here we made a low. And in a later stadium, I will be explaining you guys how you can anticipate on where will be the next low be. That's a very good thing to know if you want to get into a position. Where will the price make that new low, and can I get on the train to get to the upside? At this point, we made a lower high, and that doesn't mean immediately that we are in a bear market. No, we have 1, 2, 3, 4 bullish signs. If there is one bearish sign, it can be also a market manipulation. You will never take your decision based off of one sign or one confluence or one level. You always have to have multiple confluences and multiple confirmations before you know when to get in or when to get out. And here we made a new higher low. So that's again a bullish sign. Here we have some red candles, but we're not gonna see those as highs or lows. Just see those as bumps on the road up. And here we made a high, and again a higher high, and again a higher low. And I'm expecting to make a new higher high again. But this is for Sol. Also, if you're gonna zoom out, you can see the all-time high was on 259, and we are currently made a recent all-time high on 209. So we still have some levels to the upside. I'm not gonna discuss those levels right now, but you have to know this market structure is the fundamental. So like if trading in general is running, this market structure is walking. You have to know these things, and you have to see it immediately. Like if I watch this chart, I can tell you immediately without making those circles if we are in an uptrend or if we are in a downtrend. Also, like I said in my previous video, you will always determine your stop loss, like your red line in the sand, based off the market structure. If you're gonna take your entry based off of confluences, you will never take your you will never put your stop loss based off of confluences. The stop loss will always be determined based off the market structure. You can also take profit based on off of market structure. And you have to know that you don't have to put your stop loss immediately below the last low or above the last high, because the rest of the traders, everybody knows you have to put your stop loss below the last low or above the last high. So there will be a lot of liquidity above those places. As you can know, the market loves those liquidity. Also, now we are trading with private equity firms, and they need those liquidities to get their entries. They have big entries, so they need to get to those liquidity points. So everybody's stop loss will get out, and their orders will get filled. Let me point out another thing. So we have a bull market, a bear market, but we also have a consolidation phase. And that consolidation phase is this: when the price is moving sideways. I just draw a channel, but the price went from left to right sideways for a couple of months, and that's actually the easiest way to trade it, because you trade it from the upper side of the channel to the downside of the channel, and use the middle of the channel as a take profit point. So you can short it from the upper side of the range until the middle of the range. If you see we break the middle of the range, then you're gonna trade from the downside of the range until the middle of the range, and again until it breaks it. As you can see, when we have broken this channel, we went into an immediately bull market. So that can also be a clear sign to get into your long positions. Let me get to you guys also like a bear market situation. If this is the top of the bull market, then we have made here a new low. This is the first low. And we make here the first official bearish sign, and that's a lower high. And then we get here and we make a new lower low. And then when price goes up, it tries to, but it makes a new lower high. So I hope you guys can see what I'm seeing, what I'm pointing out right now. This is a clear stairway going down. This is a clear stairway going up. So you should always see it as a stairway. Is the stairway going down? Then it's a bear market. Is the stairway going up? Then it's a bull market. And the more you zoom out, the easier it gets to see that stairway and the market structure. No matter what kind of trade I'm going to take, even if I'm going to take a trade on the 1 minute chart, I will always zoom out to know which direction is the market going today. Are we going up or are we going down? That's it. I hope I have explained it to you guys so that you guys understand a little bit about the fundamentals of trading. I want to let you guys know you can use these kind of technical analysis on crypto, on Forex, on stocks, on anything that has a chart. You can analyze it and do technical analysis on it, and on anything. Market structure is always the basics. Even if you trade Forex, even if you trade stocks, you have to know the basics of the market structure. Is the market going up or is the market going down? That's it. I hope I've explained it a little bit so that everybody can understand it now, and see you guys at the next video.